Hello and welcome to the preview for the October rate decision from the European Central Bank. All analysts are forecasting no change from the ECB today in regards to rates, but that's still with a negative deposit rate of minus 0.2%, so still really pushing through stimulatory traditional monetary policy. As such, all focus will turn to comments out of ECB's Draghi at the press conference, where he's more than likely to comment on the recently launched asset-backed securities and covered bond purchase programme. We have seen some further details of this seeping through heading in towards the release on Thursday. That is that the ECB could be pushing to lower the quality of debt that is accepted at the asset-backed securities purchase operations to include junk-rated asset-backed securities. Now, this could include Greek and Cypriot bundles of bank loans, which would be very stimulatory to the monetary transmission mechanism over in southern Europe. However, there are a lot of downsides to this, as it will mean that the ECB take a lot of risk onto their balance sheet, which would more than likely be opposed by some of the northern European states, unsurprisingly the likes of the Bundesbank in Germany, as well as the Finnish and Luxembourg representatives on the ECB. As such, we will be looking out for a couple of more questions that need to be answered on the ECB's ABS purchase programme. That is, how much they're looking to buy, how long it will go on for, and just exactly what securities they're going to purchase. Expectations are for a purchase programme of around 200 billion euros to take place over a period of around 12 months or so. Just to put that into context, that's the sort of thing that the Fed conducted over a period of 6 months at the peak of their QE3 programme. As such, anything falling short of these estimates could require a lot of short covering to take place in the euro in order to undergo a market correction as bond yields rise across the curve in not just Germany but also specifically in the periphery, as some of these previously profitable positions are unwound. Nonetheless, if we do see any hints towards further programs that could be launched by the ECB, including the likes of sovereign QE, a sustained period of downside could push euro-dollar to again multi-year lows, which are seen at around the 25.70 mark in euro-dollar, as well as bond yields coming under further pressure, specifically again in southern Europe. We also get some comments on the most recent TLTRO operations from the ECB, which was particularly disappointing for the first tranche. However, ECB's Draghi is more than likely to point to the ongoing asset quality review as part of the European bank stress tests as one of the main reasons for why banks held back in the first TLTRO operation, which is now expected to bounce back when this second tranche is issued in December. As always, the ECB rate decision occurs at 12:45 London time, with the press conference following 45 minutes later, which will bring you as soon as it hits the wires, as well as any other relevant commentary to your trading. But in the meantime, that's all from me. Make sure you have a fantastic day.